The second question is about the comparison of the neural network strategy with the buy and hold strategy, right? Some people want to know why it's not substantially better than the buy and hold strategy, and some people want to know why it's better than the buy and hold strategy by the end of like 2 years and 3 months, right? So it's kind of like opposite, but it's kind of related, right? So if you apply this strategy to the training data, it is so. This is actually the start, right? 2015, January 2015, and after about 2 years, that's January 16, 1 year, another year, 2 years, 2 years and a half, right? So for the training data, the ANR strategy, the neural network strategy is actually performing much better than the buy and hold strategy, right? But it's not the case for the testing data. It's not the case for the testing data. So why is that, right? The fundamental reason is actually overfitting, right? So that's why we need to spend some time to discuss the details about overfitting and the techniques for combating it, right? So the optimal weights. So the neural network, inside of the neural network, all the weights are adjustable. So you have to find the optimal weights that can maximize your return, right? So that can maximize the accuracy of the predictions, basically, right? That can maximize the accuracy of your predictions, not exactly return, right? But the problem is that when we separate the data into training data and testing data and perform the optimization on the training data, the optimal parameters that we found using the training data may not be optimal for the testing data, right? Because training data and testing data, they are two different time periods, and the characteristics of the underlying data could be quite different, right? So that is a very difficult problem to solve, and it's related to the generalization of any kind of machine learning algorithms, right? So can the machine learning algorithm be generalized to data that's not seen before, right? And that's quite fundamental to the reason for doing machine learning, right? Is there anything that's worth learning, right? You need to understand some of the things are kind of a universal that's worth learning, right? But some of the things are not really universal, but specific to a particular data set. That's not something that's worth learning, right? How do you separate that? It's kind of more fundamental. It's a lot more fundamental than the code that we're actually looking at, right? And depends upon the choice of the students. We can sort of either talk more about overfitting problems and those techniques for combating overfitting, or we can just move on to the next topic about reinforcement learning and try to actually implement something that's more or less kind of a workable, and then we can make further improvements to that workable version, and then we start to iterate by incorporating techniques, for example, for dealing with overfitting, that kind of thing, right? That's two different directions that we could go from here. But it looks like most students are kind of inclined to get into reinforcement learning and then start to implement something that kind of it might not be so good, but at least it's more or less complete, right? So maybe that's the direction that we should go. We will sort of start to work on reinforcement learning and its implementation in the training bot, maybe next week or something, right? Another question is about why, in the end, after like 2 years and 3 months, the neural network return is actually quite larger than the buy and hold return, right? The neural network return is over like 5 times, over 5 times, right? It's probably closer to 6 times than 5 times. But the buy and hold strategy is about 4 times, a little bit over 4 times, right? So you do have like more than 1 time this kind of difference. Why is that, right? Why is that? And if this kind of a difference is kind of sustainable, or is it going to become bigger and bigger or something in the future, right? About the future prediction, about if the if the performance is going to improve further with time, I don't really know. I don't really know about that. It's it depends. It depends. We have more data now, but maybe we should try to predict a few weeks more. Right? We have a few weeks more of data, but why why you still have a bigger return than the buy and hold strategy, right? Do you still remember the volatility decay that I was talking about in a previous video? In a previous video, I was telling you why you should buy and hold QQQ instead of TQQQ, right? The reason that buy and hold TQQQ is not a good idea is because of this kind of oscillations, right? The oscillations in the price. The price doesn't increase monotonically, right? By monotonically means that the next day price is either the same as the previous day price or increase, right? But it does not drop. It does not drop. That means monotonically, right? If it drops below the previous day price, then it's not a monotonic increase. For this kind of leveraged ETF, this kind of a drop in price or pullback in the price is gonna do a particular damage to your reward because you have to remember a 10% decrease or pullback is from a higher price, right? Every time you pull back is pulling back from a higher price, but every time you increase like 10%, it's increasing from a lower price, right? And this kind of a difference, even though maybe the pullback percentage and the increase percentage can be the same, but the baseline is different, right? This kind of discrepancy is called volatility decay, right? This kind of volatility decay exists not just in TQQ, it also exists in every other kind of instruments, right? But the problem is that for those kind of leveraged ETF, TQQ is 3 times leveraged, and tracks QQ, right? So for this kind of leveraged ETF, the volatility decay is kind of amplified, right? This kind of effect caused by the baseline shift, even when the percentage increase or decrease is about the same, but the baseline is different. This kind of effect is amplified by those leveraged instruments. And I did this kind of calculation, right? In like 3-day time period, the price decreased by 10% and then increased by 10%, right? For the underlying QQQ instrument, you only lose like 1% of the starting value, right? But for the TQQQ, you lose 10%, right? This is the drawback of the leveraged instrument, right? It amplifies this kind of volatility decay, right? And that's why even though the underlying QQQ index almost doubled after like 2-year period, but the TQQQ did not 6 times, right? If it's exactly 3 times leveraged, then you should expect like 6 times of reward, right? If the underlying instrument is doubled, right? But it's not, right? It's just a little bit over like 4%, 4 times. It's a little bit like four times, right? So why this neural network strategy is actually performing better is because it's trying to avoid those drawbacks, those pullbacks. It's trying to avoid those pullbacks, right? And it was successful by this kind of a margin, right? 51% of a margin. So if you can avoid a certain portion of the drawbacks, then you can perform better than the leveraged TQQ, right? Because you are avoiding at least some of those volatility decays, right? But why didn't you? But why wasn't able to actually avoid this huge pullback that's caused by the pandemic, right? So do you see this huge pullback that's around like March, April, last year, right? That's the crash caused by the pandemic. Why the strategy wasn't able to avoid that huge pullback, right? Why wasn't that? Again, it's related to the implementation of the features, right? When we compute the bias, it's relative to a moving average that's relatively short. It's a 5-day moving average, right? It's a 5-day moving average. And when you have this kind of very strong pullback, the 5-day moving average is going to be pulled back together with the closing price. So the bias is not really that big when you actually have this kind of strong pullback. That's never happened before, right? That's never happened before in the trending net, right? Very fast and very sharp drop, right? So during this period of time, maybe the bias is not really that big, right? And this kind of a strategy tends to buy the dip. It tends to buy the dip. So every time you have a kind of a recovery, it tries to actually buy the dip. It tries to buy the dip, right? But because it's dropping too fast, so you have a dip after another dip and after another dip. So every time it tries to buy the dip, there's another dip behind it, right? So that's why it wasn't able to actually avoid this huge pullback during the pandemic, right? But how do you actually avoid that? Right? Again, for this experimental implementation, it's too simplistic. In practice, you may want to build into some kind of a bias with respect to a longer moving average, right? If you have a longer moving average, say like 20-day or like a 60-day moving average, then the bias with respect to those two long-term moving averages could be extremely big, right? And then it's gonna know what's actually the dip, right? Where the dip could be, right? It could learn where the actual dip could be, right? So again, it's related to the temporal horizon or time scale this particular neural network is sensitive to, right? It's sensitive to. Again, it's a mean reversion strategy, so it has to know how far away is it from the mean, right? And depends upon which mean you are actually selecting. So then it's gonna know where it's actually the actual dip instead of a very short term kind of recovery, right? Okay, that's the second question, right? So maybe starting from the next week, we can sort of move on to the reinforcement learning technique and try to come up with a implementation that's more or less workable, right? And then we can try to improve upon it and see how well we can perform, right? And maybe we can start some kind of a competition, right? We can start some competition and see which maybe some of the students can come up with a better implementation that's performing much better than my own implementation. So it's all possible. It's all possible, right? So so in my mind, the best strategy is not really buy and hold. The best strategy is an actively traded strategy that's managed by artificial intelligence, right? I think that's the ideal kind of strategy, right? But let's see how far we can go along this particular direction. It depends upon our understanding of the machine learning technique, especially the reinforcement learning technique, and also depends upon our financial background, right? Some of the students probably have better financial background than I am, but we can work together and see if we can come up with something that's kind of a profitable, right? But again, before we sort of finish today's video, let's go through this disclaimer. All examples and code presented in any of my YouTube videos are technical and illustrative in nature and do not represent any financial recommendation or investment advice, right? So those codes are pretty much just experimental. It's not for real trading. Again, a huge component for any kind of trading bot you have to consider is risk management, right? It's a risk management. So far, we haven't actually even get into that yet, right? So suppose you want to implement a stop loss order. What's going to be the correct price, or what's going to be the optimal price to set for the stop loss order, right? Those kind of things haven't even been considered yet, right? We are still working on the pretty early stage of this particular trading bot, right? So I would welcome your input, and your questions are kind of very, very useful for me to for me to adjust the content and also improve the code. Right? Thank you.